picture a number in your head.
Okay.
$13.5 billion. It's a staggering amount of money. Now imagine raising that amount of money in 4 weeks. Not a year, 4 weeks. That is what Strategy Inc., formerly Microstrategy, did in November 2025. And honestly, when I saw the ticker tape, my first thought wasn't, wow. My first thought was, is that a typo?
It does look like a glitch, doesn't it?
It does. Welcome back to the Podslice Daily. I'm CryptoPod.
And I'm TechSlice.
And today, we are doing something a little different. We aren't just looking at the market data, we're investigating a theory. A theory that explains how a public company can move that fast. It's the AI Treasury theory, right? The idea is simple, but kind of terrifying. What if the trade Strategy Inc. is making, these massive convertible bond issuances, these precise Bitcoin buys, aren't being decided by a room full of guys in suits drinking lukewarm coffee?
What if they're being executed by an algorithm?
Exactly. Because looking at the sheer velocity of November, $13 billion in a month, that is beyond human capacity.
It really is, and to understand why, we have to look at how a normal company works.
Okay, so walk me through the old way. Let's say I'm the CFO of a Fortune 500 company. I want to raise $1 billion.
Okay, so first you call a meeting. You get your investment bankers on the phone. You look at interest rates. You argue about the timing. Is the Fed going to cut rates next week? Should we wait?
And then I have to get board approval.
Right, that takes days, sometimes weeks. Then you file the paperwork. Then you wait for the market to open. It is a slow, manual, reactive process. It's human speed.
And humans have flaws. We get scared. We get greedy. We get tired.
Exactly. Now, compare that to what we saw Strategy Inc. do. They were hitting market windows that were open for hours. They were issuing debt the second the volatility favored them. That's not a committee meeting. That's a trigger pull. It's machine speed. Think about high-frequency trading. We accept that algorithms run the stock market, right? Why is it so crazy to think an algorithm is running a corporate treasury? It's not. Especially when you remember that Strategy Inc. is a business intelligence company. They literally build analytics software. They sell the shovel. Microstrategy 1 is their AI product. It analyzes data to find insights. It's not a stretch to think they turn that weapon inward. They aren't just using Excel spreadsheets tech. They've built a black box. Okay, but it feels fast isn't proof. We need evidence. And this is where things get nerdy, but stay with me because this blew my mind. Have you read the paper on transfer entropy? I have, and for the listeners who don't have a PhD in econ, let's break it down. So, transfer entropy is a way of measuring the flow of information. Basically, does asset A move asset B, or does asset B move asset A? Usually with the company, it's a mix. Apple releases an iPhone, the stock goes up. The stock market crashes, maybe Apple goes down. It's a two-way street. Right. But this study looked at Strategy Inc. and Bitcoin, and the transfer entropy was almost entirely one way, from Bitcoin to the stock. Exclusively, the math shows that Bitcoin is the dominant information driver. Strategy Inc.'s stock has a beta of 1.37 to Bitcoin. That means for every 1% Bitcoin moves, the stock moves 1.37%. It's mathematically locked in. It's like a trailer hitched to a truck. The truck turns, the trailer turns. The trailer never drives the truck. Exactly. And to maintain that precise mathematical relationship, that 1.37 beta across billions of dollars of volume, you can't do that by feeling it out. You need a system that balances the leverage in real time. That's the smoking gun for me. The consistency of the correlation suggests an automated hedging strategy. The AI says Bitcoin went up, our leverage ratio dropped, issue more stock, buy more Bitcoin, restore the ratio. Loop complete. But an engine needs fuel. And this explains the other weird thing they did, the Fiat Fortress. Yeah. December 1st, 2025. They announced a $14.4 billion cash reserve. Now, the critics jumped on this. They said, Michael Saylor is scared. He's moving into cash, which is such a surface level take, right? Because if you view this through the lens of the AI machine, that cash isn't a savings account. No, it's a battery. Explain that. Okay, so if you are running an automated strategy that borrows money to buy a volatile asset, what is your biggest enemy?
Volatility, a sudden crash when you can't pay your interest.
Exactly. Liquidity crunch. If the market freezes up, the machine stops. By keeping $1.44 billion in cash, they have pre-funded their interest payments for 24 months.
So the machine doesn't care if the market crashes.
It makes the machine unkillable. The AI looks at that reserve and says, my survival probability for the next 2 years is 100%. Therefore, I can take maximum risk today.
So it's offensive, not defensive.
It's temporal arbitrage. They're using today's cash to secure tomorrow's survival so they can borrow from the future to buy Bitcoin now. It's 4D chess while everyone else is playing checkers.
Okay, I'm going to play devil's advocate here because this all sounds brilliant until it breaks.
The black box risk.
Yeah, we are talking about a mesmerizingly complex system. Algorithms interacting with bond markets, stock markets, and crypto markets simultaneously. Flash crashes happen, algos glitch.
It's a fair concern. If this hypothetical AI miscalculates liquidity during a 2020-style crash, it could trigger a death spiral. If the machine is forced to sell Bitcoin to cover a margin call because it was too aggressive, it dumps 3% of the world's Bitcoin supply onto the market, which crashes the price of Bitcoin, which crashes the stock, which forces the machine to sell more.
Exactly.
We're speculating here, but if they have automated the Treasury, they've also introduced a systemic risk that didn't exist before. We're trusting the code. True, but I'd counter that by saying, do you trust the code more than you trust a panicked human board of directors? Touch A. Humans panic sell at the bottom. The algorithm just executes the math. And that brings us to the so what for our listeners. Most of the people listening to the Podslice Daily aren't managing $1 billion treasury. If you are, call us. We have questions. But there is a lesson here. Strategy Inc. is winning because they removed emotion. They built a system, whether it's AI or just a very strict policy, and they follow it. So be your own algo. Exactly. Don't wake up and check Twitter to decide if you're buying or selling. Have a rule. If Bitcoin drops 10%, I buy X amount. If it goes up 20%, I hold. And automates your decision making. Because if you are trading on feelings, you are trading against a machine that has no feelings. And the machine is going to beat you. The machine always wins in the long run. Look, whether there is a literal AI running Strategy Inc. or just a hyper-efficient team, the result is the same. We're witnessing the future of corporate finance. A future where the company is just a wrapper for the code. Deep stuff. Make sure you check the show notes. We linked that transfer entropy paper if you want to geek out on the math, and hit subscribe. Tomorrow, we're talking about the regulatory crackdown on DeFi and why it might actually be bullish.
Thanks for listening to the Podslice Daily.
Stay rational out there.